When lending money to others, you constantly expose yourself to certain risks. There are plenty of investors that lost thousands of euros on various P2P or crypto lending platforms in recent years, and if you have been following this channel, chances are that you managed to avoid some of the losses. Now, if you are watching my monthly portfolio updates, you have a clear picture of where I am invested in the P2P lending space. One of my main positions is also Esketit's loans in Jordan. As someone who likes to be informed about all the potential risks, I've recently talked to the risk manager in Jordan to get additional insider information about the lending market to evaluate the risk better. And in today's video, I will briefly summarize the key talking points so you can better evaluate the safety of your investments in Jordan. I'm your host Jakub from P2P Empire, and if you're new here and interested in becoming more educated in P2P lending and using it to make money online, consider subscribing and hit the notification bell to avoid missing out on future videos. Alright, so Esketit is a P2P lending platform currently offering 14% interest on loans from Jordan, in which I started investing after my trip to the Baltics, where I met with the founders of Esketit and the managers of Money for Finance in Jordan. If you're unfamiliar with this platform, you should know that Esketit is one of the best P2P lending platforms today, accepting investors from any country, including the US, as long as you top up your accounts in stablecoins. The platform offers between 12 and 14% interest on your investments, which is an attractive yield that will help you protect your money from inflation. My current exposure to Esketit's loans from Jordan is about 15,000 euros, so it's also in my interest to keep an eye on the market development in Jordan. My source for this video is Atis Verdenhoofs, an experienced risk manager who previously worked at Robocash and for Finance in Latvia. Before his experience with lending companies, he worked in 2 Scandinavian banks for 8 years. We talked for an hour about the various aspects of the lending business in Jordan, and if you want to watch the entire interview, you can access it by becoming a member at buymeacoffee.com/P2P-Empire. In this video, I will summarize our talk, so let's look at how Money for Finance manages risk in Jordan. The lending business in the microfinance sector in Jordan had not existed before Money for Finance entered the market in December 2020. There are a few local lending companies, but other than that, there is no competition in this sector. This means that Money for Finance is the largest non-banking lender in Jordan. The lending company started its operation in Jordan about 2 years ago and built up a team of around 200 people in Jordan and 4 business development managers in Latvia who help to steer the company into the right direction. Esketit founders are also the founders of Money for Finance, Davis Barons and Matis Ansvieshulis, who founded Cream Finance, a well-established lending group in Europe. Money for Finance has served over 80,000 clients in Jordan, issuing over 30 million euros in loans, from which 18 million were issued in 2022. The lender has a 90% retention rate, meaning 90% of borrowers return to get a second loan. 70% of borrowers apply for a second loan within the first 30 days. It's also worth mentioning that Money for Finance reported a gross profit of 2.99 million euros in the first half of 2022. As an investor that is investing in short-term loans, you should pay good attention to the performance of that loan book. The default rate of the Money for Finance loan book is between 6 and 9%, which is lower than in specific European markets or other emerging markets in Africa, South and Central America, or Asia. The first payment delay rate after 30 days is below 10%, meaning there is a good payment morale in Jordan. The quality of the loan book is directly correlated with the scoring of borrowers. Money for Finance uses data from the Central Bank Credit Bureau, but relies heavily on the customer-provided information. The risk manager shared with me that previous experience with the customer plays a big part in the credit risk score models followed by the company. The lender expects additional digital data sources about the borrowers to be available in the future as the market develops. Jordan is without a doubt an emerging market, so I was curious about some of the key differences between the lending practices in Europe and Jordan. Atis told me that the lending is essentially offline, meaning the lender must be present in the top cities to attract the borrowers. Operating dedicated offline branches comes obviously with additional operational costs for the lender. On the other hand, it also gives a good opportunity to expand the collaboration with borrowers and hence increase the revenue. What's also different in Jordan is that the official income of borrowers is quite reliable and predictable compared to the data lenders achieve in Latvia, for example. An interesting fact is also that when the borrower repays their loan in Jordan, it does not increase their credit scores like it's the case in many other countries. During our talk, I also asked questions about the funding of the lender's operations. The risk manager told me that the operational costs are covered by attractive capital and the company's directors, whereas the lending portfolio is funded mainly by P2P investors. The skin in the game in the lending portfolio is 5%, which means that investors are taking quite some risk when funding those loans. However, the lender's skin in the game in Jordan lies primarily in the capital invested in setting up and running their operation. During my visit to Esketit headquarters in Riga, I noticed that the founders are hiring only professionals in every position, meaning they invest a lot of money into their team, which is not always the case with some of the competitors in the lending business. Having professionals running their businesses significantly increases the company's efficiency and profitability in the long run, reducing the risks that investors face. Certainly, we should not be naive here. P2P lending is not risk-free in any market, so I dug deeper into some of the country's relevant risks. Investors should note that as of right now, Money for Finance does not require a lending license to operate in Jordan. The lender has to follow the Ministry of Industry and Trade rules, but there are no APR caps, meaning the lender could, in theory, charge whatever they want to borrowers. If you are an experienced investor, you have likely witnessed some of the defaults of lenders in emerging markets on various other marketplaces. One of the lending companies owned by one of the shareholders of Mintos, Finko in Armenia, was one of those events that shocked many investors as the regulator revoked its lending license and ultimately locked more than 12 million euros of investors' investments. I therefore asked the risk manager how his company mitigates the risk of those unexpected harmful scenarios. I guess when it comes to regulation, any change that is happening gradually, you as a lending business can adapt to a certain extent, right?
Yes.
From what I am more curious is about chances and risks that could materialize from one day to another. Because I've seen already in different markets, I was 2 years ago in Armenia, lending license has been revoked, lender goes bust, investors are losing money. Of course, you will not tell me that there are any risks that you're expecting, right? But perhaps just your own opinion on situations like this. Is this something that you can even mitigate or?
Yes. My own opinion is like this, that yes, this can be mitigated by the operations, how you set them up, how you enter the market, how aggressive, what's your policies and approach towards the customers. If you enter a new market with a super aggressive pricing, super aggressive debt collection processes, of course you will have a negative feedback kickoff from the customers and the regulator will start looking into your practices. If you go in already with a long-term perspective into the market, you do not go with super aggressive collection practices. We do not do that. You do not go in with a 500 APR. We do not do that. These are the things I think that should be kept in mind when you enter a completely unregulated new market. Because that will also leave some low perception also for regulator. If you start with these type of super aggressive approaches, of course, depending on the regulator, you might get some also super aggressive reaction to that. So that's, I think, one of the ways how to mitigate these sudden strict regulations. So from my perspective, I think we are on the right path in Jordan.
So as you can see, the way Money for Finance is set up reduces the risk of sudden unexpected harmful events from the regulator's side. You should also note that the company has experienced professionals in Jordan who monitor the existing rules to ensure compliance and protect the business sustainability. So that's been my summary of our discussion. Of course, if you want more insights, I suggest to watch the entire interview. I believe that for the time being, the portfolio of loans in Jordan is well managed. I can't tell you that there won't be any change in the future. You should certainly monitor the performance as the lending industry is changing rapidly. At the end of the day, any potential sudden harmful events may negatively impact the performance, which is valid for any market. When investing in loans in Jordan, you are ultimately investing in the team's ability to protect your interest, which I believe is very competent and professional. Apart from the excellent performance of the loan book in Jordan, Esketit is a very accessible platform that offers almost immediate liquidity and some of the highest rates in the industry. If you're looking for options to reduce the impact of inflation, Esketit's offer is something you should seriously consider. I recommend bookmarking our Esketit review to be up to date about the latest developments on the platform. If you think Esketit is a good fit for you, you can also use the link in the description below to get a 1% bonus on your investments. If you enjoyed this type of format and you would like to get more insights into various lending markets, hit the like button. Thanks for watching and I'll catch you in the next video.